Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Igino. Welcome, Bob.
Good to be here, Jeff.
Well, it's interesting. Here we are in September, the end of the third quarter. What expectations do you have for the fourth quarter here in 2019?
Well, we got earnings, obviously, still dealing with trade tensions, but it is important to know that we're entering the historically strongest bullish period for stocks, November through January. So I'm always going to start with that.
All right, fair enough, but I want to bring up October of 2018. They called it Rocktober. Do you see that volatility coming back this year?
I do. Again, typically the most volatility happens in October. I wouldn't see any reason for that to change given all the tensions.
All right, great point. Let's get this first lightning round. You ready?
I am ready.
Crude oil. Well, crude oil, talk about volatility. There's been sensational volatility, a lot of geopolitical tension. Talk to me a little bit about crude oil WTI.
Well, there has been. Obviously, we got that spike after the attacks that were allegedly backed by Iran. So that pushed crude oil up, and we've since fallen back to a slightly higher range.
Well, that makes a lot of sense. That day, that intraday spike, 15% spike, now it pulled back. But what type of trade example would you want to approach into the WTI crude oil market?
Well, again, because I think it's just a new range for now, I'm looking at selling the October week 1 61.63 call spread in WTI crude oil. Selling this spread allows a trader to collect about $180. This call spread expires October 4th, and the no futures were trading right around 57.59 when we looked at this.
No, this makes a lot of sense. And the at-the-money volatility, right around 35%. What does this mean, and why does it matter that it's elevated at 35%, Bob?
Well, 35%, it's high. It's really at the highs for 2019. We were here in early January, late December, early January. Other than that, we've really been much lower than that. So selling options with high vol is a decent strategy.
Great stuff. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round.
I'm ready.
Tech, too hot. Well, we've talked about tech all year long, Bob. It's interesting to see at the quarter end here, will we continue to see buyers come into tech?
Yeah, tech is definitely in the crosshairs of regulators as well as the U.S. Congress, but it is interesting to note that Facebook had a pretty decent, although small, victory in the EU this week.
No, that is important, certainly noted. And it's interesting, as we kind of start off this Q4, I'm looking for a little bit of a pause here. Therefore, I want to be a seller of this call spread. I'm looking at identified October week 1, Bob. That's the 8,100, 8,400 call spread in the E-mini NASDAQ. This should allow an investor to potentially collect about $100 if we do see a little bit of a pause in this rally in tech.
Yeah, when we looked at this, the D's futures were about 78.34 with at-the-money vol at about 16.06, which is not high historically, but it is high recently.
No, that's a great point. And in the event you're raising an eyebrow thinking they're going to continue to buy tech at the end of Q3 or maybe to start off Q4, what type of risk mitigation tool could you utilize, Bob, here? And I know we have the micro E-mini NASDAQ futures to really kind of help us mitigate risk.
That's one of the things I really like about the micros. And I like your lower strike because the old highs in NASDAQ are about 80.50 or so. So what I would do is I would buy 5 of the micros up at around 81.50 in case it extends further than it usually would, but just based on price action.
No, that makes a lot of sense. And by buying 5 of those micro E-mini NASDAQs, you're mitigating about half of that exposure you have all the way up to 8,400 on that top strike. So great stuff, Bob. Appreciate you coming on. And make sure you tune in every week because we will continue to strike options.